I'm Alan Kenny, Managing Editor with REIT.com, and I'm here at the Four Seasons Hotel in Washington, D.C. for the Real Estate Roundtable's fall meeting. Joining me is Bob Lieber, Executive Managing Director of Island Capital. Bob, thank you for joining us.
My pleasure, thank you.
Looking at the market for acquisitions, are there any specific sectors that you think are more attractive maybe than others at the moment?
When we look at the markets today, I think there's relative strength around those asset classes where you have higher resiliency or elasticity around demand for users, and assets that are probably more difficult to value or to identify for acquisition of those that have a larger degree of beta, if you will, around occupancy. So what I mean by that is I think when you look at the multifamily space, the needy renters, the B quality multifamilies, I think we see pretty high resiliency for demand around those types of assets and a relative degree of interest in trying to buy those assets because you do have that projected stability and kind of underpinnings to the cash flows that are going to be generated from those assets.
And then we looked at sectors. How about specific markets? Are there any markets that investors are really interested in at the moment?
Again, I think it depends on the types of assets and the returns they're looking for. Clearly, the 24/7 markets are differentiating themselves positively in terms of where investor interest lies. Certainly in New York City, where we are here in Washington, D.C., and San Francisco, all very strong markets with keen interest from investors who are looking for places where they can invest and get the stability, again, because of the quality of the assets that underlie that. I think there's also interest when we look, when you go up and down the East Coast, Mid-Atlantic and the Southeast, certainly in the West Coast in California and Oregon and Washington, and even in Texas. I think there's strength and interest in many of those markets as well. Where we still see a lot of question marks around direction and values today are those markets in Las Vegas and Arizona and Phoenix and those areas. I think longer term, where you look at where there's good demand for job creation and population growth in those markets will be strong longer term. But today there was so much overbuilding that exists in those markets and such high vacancy that I think that makes those markets particularly challenging.
And part of your job is dealing with non-U.S. investors. What kind of interest are these sovereign wealth funds showing here in real estate in the United States?
Well, again, I think that where you see the sovereign wealth funds in particular are looking where they think they can get good value and they can get great stability. So we see some of the sovereign wealth fund players coming in the debt side, wanting to be a little more senior in the capital stack. They also are looking for ways to avoid the taxes associated with the taxation associated with the FIRPTA taxes on international or overseas investors, but they're also looking in the major markets for the major assets and the stability of those returns and trying to buy at a particularly attractive price.
And then lastly, what about mergers and acquisitions? What kind of M&A possibilities do you see out there?
Well, I think there's a lot going on in the M&A world today, and it depends on what part, again, of the real estate sector you're talking about, both on the asset side but also on the service side. And clearly, where you see so much pressure in the economy, you're seeing pressure on margins, and you're looking for ways that you can generate economies of scale. So there is certainly an improvement in profitability that comes when you combine forces and improve the efficiency of those operations. So we have seen in the service sectors, and I think we're going to continue to see more activity when we look at the potential mergers and acquisitions that come from that space.
All right, well, Bob, thank you very much for your time.
All right, Alan, thank you.
And for more on this and other REIT news and analysis, check out REIT.com.